Back when Logan first started earning money, he went to standard financial advisors and sources to try to figure out what to do with it. Who hasn't done that, right? But never received any satisfying answers. It all boiled down to do this: buy mutual funds and invest in 401ks. How many of you have heard this? And nobody could tell him why he should do such a thing. So he started searching and eventually stumbled on someone who said, replace your bank account with dividend paying whole life insurance. Ooh, that got my attention. At the time, he had no idea what whole life insurance was, but this started an extensive research process where he discovered the infinite banking concept, the process of becoming your own banker. Eventually, in the wake of COVID, he decided he believed in this alternative financial strategy so much that he needed to share it with others. And he started his business and has been helping people, average people, reclaim the banking function for themselves ever since. You are in for quite a ride, ladies and gentlemen. Again, the one and only Logan Hertz. And this is going to be one heck of a show. So don't go anywhere, anyone. So Logan, to kick things off, I like to dive deep into, literally into your brain, that big, beautiful brain of yours. When you get up in the morning, you know, being an entrepreneur, being someone who has basically started his own business and knows all of the speed bumps that come your way every day, the challenges that we face, because that's basically the definition of an entrepreneur, is someone who solves problems, solves issues. And that's why people come to us and exchange their money in return for us solving. So getting up every day, knowing that you have all of these hurdles, speed bumps, things that knock you back, waiting for you, because you know it happens every single day. What is going on in your big, beautiful brain that keeps you motivated, keeps you driven, that you're going to, at all costs, I'm going to keep forging ahead and serving others and helping others to get ahead in their financial lives? What is that for you?
Yeah, well, that's a great question. I don't want to get too preachy and self-righteous, because I hate it when other people do that. But at the risk of being preachy and self-righteous, I just try to trust divine providence, you know, and if my business fails, it fails, you know. This isn't my only goal, right? My business is great. It's being a business owner. I'd love to be successful, but at the end of the day, it's not up to me, right? So you do have to kind of let go and realize the results are not up to you. You just try to be consistent in doing what you're doing. And I think bringing it down to a more natural level, I think like every successful entrepreneur, which I would hesitate to call myself successful, depends on who you compare me to, but you have to believe in what you're doing. I believe in what I'm doing. I believe in the infinite banking concept. To me, it's just a no-brainer. Why would you not want to control the banking function in your life? Why would you not want to have control over your capital? Why would you want to give up control to a banking system that maybe doesn't have your best interests at heart? I mean, I know that's a shocker. That's a real shocker for people. But maybe the banks aren't trying to do what's right by you all the time. Maybe they have other motives. I don't know. Maybe. You know, so, yeah, I mean, I believe in this. That's really what it boils down to. And that's some of the most heartwarming feedback I get from my clients, because I am the worst sales and marketing person you've ever met. I mean, there's nobody worse. I'm terrible, awful. The one thing I do have going for me is that I am a true believer, and you cannot fake that. You cannot fake that. So that's ultimately, I think, what keeps me going. I'm a true believer.
That's a massive component in successful sales, believe it or not. When you're a believer, you have confidence in what you're talking about. And that's what people feed off of. That's an inherent, massively powerful trait to have, that you have. So I would not say that you're a horrible salesperson. You just don't know that you're a phenomenal one, because you have that confidence. And I mean that. I'm literally saying that is the reason you are getting the level of success you are getting right now, is because your level of confidence is helping with that. Now, later down the road, do you want to maybe pull in some salespeople that are maybe more polished and trained in selling? Maybe. Let's see how it gets when you get to that point. But right now, that just flew off the screen when you said that. I said, there's the reason right there. You believe so 100% about what you do, that it's going to help people, that the results are going to be there, that the confidence just exudes from it just comes out of your pores. That's what people just eat up, and in a good way. They love this. It's like, I can trust Logan. I know this guy is not feeding me something. So that's phenomenal, man. I mean, that's our show right there. We just gave every tip everyone needs to. That was a great, powerful opening.
Done. There you go. You got the meaning of life.
Oh, that was great. Okay, so I want to peel out or rip off the Band-Aid, so to speak. And this is a lot for me as well, more than anybody probably. You've mentioned, and I read it in your bio, the infinite banking concept. I had not heard of this before I met you. If you wouldn't mind, could you just kind of open up the curtains and reveal what that really means in layman's terms, so everyone can understand?
Absolutely. So I'll just say that I'll give people resources. You're probably going to want to research this a little bit more. It's not something that can be explained in 10 seconds. But what we're doing is we're becoming our own bankers. Okay, so we're reclaiming the banking function for ourselves. How do we do that? Well, we are replacing our bank account conceptually, now I'm talking conceptually, with a specially designed whole life insurance policy. And if you don't know how whole life insurance works, that's probably good, because then you'll be able to see banking. Because I've learned that the gap in most people's knowledge is banking. Banking is a mystery to most people, right? They have a bank account, they have a debit card, they use a bank account, but they have no idea what the bank is doing with their money and why banking is such a profitable business. Okay. So you are engaged in the banking function all day, every day. It's just you're letting somebody else profit from it. So I'm not telling people to change anything that you're doing. I'm not telling you to change your investing strategy. I'm not telling you to spend less or save more. I'm just telling you, as long as you're engaged in the banking function, which you are, just be the one who profits from providing yourself with the banking function. So how do we do that? Well, instead of making deposits, now again, I'm talking conceptually here, but instead of making deposits into a Wells Fargo bank account, you're going to pay premiums into your specially designed whole life insurance policy. Now, it's specially designed. It's not your average whole life insurance policy. You need to be working with an agent like me who understands this special strategy. When you do that, you have cash value available to you in your policy. And cash value is exactly what it sounds like. It's basically cash that you can use. Your cash value earns interest and dividends tax-free as soon as you put money into your policy. And that earning continues compounded, uninterrupted, until the day you die. And it's contractually guaranteed. The interest is. The dividends are not guaranteed, but the interest is. So your cash value will go up every year. The only question is how much. It doesn't matter what the market is doing. Okay. We're not taking on market risk here. That's important to understand. Okay. The real magic comes in when you want to spend your money. Okay. If you put money into your standard bank account and you want to spend it, well, you got to withdraw it. And now how much money is left in your bank account? Well, less, right? Because you took money out and you spent it. And now that money's gone permanently. You spent the money and it's gone. With cash value in a whole life insurance policy, we're not going to withdraw the money. What we're going to do is we're going to borrow against the policy using what's called a policy loan. Why would we do that? Well, because no money left your policy. You're not spending any of your money. Your money is still safely earning for you inside your policy. You're spending the insurance company's money. Okay. Now, policy loan. Some people get scared when they hear the word loan. A policy loan is not a debt. There are no repayment terms on that loan whatsoever. Pay it back if, when, and how you please. It's totally up to you. This is what we mean when we say you become your own banker. What happened conceptually is you set up your own private bank, you capitalized it, and then your own private bank made a loan to you. And now you, as the banker, decide what the repayment terms are. And if you do repay that loan on terms that are advantageous to you, you're just recapitalizing your own bank. You can borrow it right back out again, right? So what this allows you to do is to keep all of your money earning for you without market risk, tax-free, even the money that you spend. So what problem is the infinite banking concept solving? Well, here's the problem it's solving. Brian, when you spend money today, you don't get any of it back. It's gone. When you spend money tomorrow, you're going to finance your purchases using your own private bank, which means you do get it back. Right? Because all of that money that you would have spent, you're still spending it, but it's still earning for you. And that's the mind-blowing idea, that you could actually spend money, but still be earning on it. You can use the money that's in your policy, but it's still earning for you in the policy at the same time.
It is pretty mind-blowing, I must say.
Yeah. And we can get, I'm trying to stay conceptual because we can get that deep into the mechanics of how it works. Everyone wants to jump ahead to how it works, but I think it's more important to nail the concept first, right? And then the mechanics become important, but secondary to what are we really doing? Because otherwise we get lost in whole life insurance, right? Mm. And this is why oftentimes people who understand or think they understand whole life insurance can't see the forest for the trees. They kind of miss it. And they're like, whole life insurance. Oh, yeah, I know what that is. Okay, well, that's not what we're doing. We are reclaiming the banking function for ourselves. And by the way, whole life insurance is great. Like if you want to buy whole life insurance, it's great. I believe in the power of whole life insurance for sure. But this is a unique strategy that uses specially designed whole life insurance.
Very, very cool and very intriguing.
So that took more than 10 seconds. That's pretty good.
Yeah, and the thing is, I'll bet, I'm going to guess, I'm going to ask you the question, how many people, or have you ever heard of somebody say, well, Logan, this just sounds too good to be true?
Yeah, I hear that a lot, and that's what I thought myself. When someone says that, I respond very positively. I'm like, that's good. That shows you're listening. Because it does sound too good to be true, right? The idea that I can spend that money and get it back, right? The idea that I can earn on money that I'm spending sounds too good to be true. Yeah. Right. And I think part of the reason is because we've gotten so used to unsound banking, which is what the modern banking system is. It's not sound banking. We don't realize how good things can be when we actually have sound banking. Right. So, yeah, and it does take time to get past that. And there are absolutely drawbacks. There are absolutely costs associated with this. And I like what Hutch of Banking Truths, who's one of the guys I learned from, says. When you get into it, you find out it's not too good to be true. It's too good to be free, right? There are absolutely costs associated with this, which are totally worth it in the long run. But that's where I'm trying to stay out of the weeds, getting into the mechanics of it.
Gotcha.
Yeah, but the banks are doing this all day long, right? All we're doing is reclaiming the banking function for ourselves, right? And not only does it give us an enormous financial benefit, more importantly, and this is something I think you realize over time, the element of control, having control over your capital. So even if this weren't profitable, right, which it is, but even if it weren't, there's still a great benefit to it that you now have much more control over your capital. Because most people don't realize when you make a deposit into a bank account, it's actually not a deposit. What you've actually done is you've made an unsecured loan to the bank. That money becomes the bank's money, and they immediately turn around and loan it out to somebody else. And not only do they loan your money out, they can pyramid additional money on top of it, right? And loan that out, right? Whereas cash value and whole life insurance policy, the insurance companies thankfully do not have a license to counterfeit, and they can't do that. So the money that's there, you actually have contractually guaranteed rights over it. So there's that element of control as well.
Interesting. Why have more people, maybe this is more widespread than I ever thought, but I'm thinking, why have more people not heard of this strategy?
What a great question. That's another great question. When someone asks that question, I'm like, that you're listening. That's a great question. Yeah. Why do most people not eat right and exercise? Right? The fact of the matter is the sad fact I've learned is that most people don't want control over their capital because then they're going to have to take responsibility for it. And they don't want that. right?
Ooh.
They really don't want that. Also, not to get too conspiratorial, but it is the case that there are large financial institutions out there that don't profit from this particular strategy and would see less profit if more people were aware of and did this particular strategy. It might interest your viewers to know that really up until the 1960s, your average American household had whole life insurance, and they viewed it as a bedrock savings vehicle. Now, they were not doing the infinite banking concept. Probably they were not probably using policy loans very much, but it was viewed as part of their financial structure, and that started to change with a lot of hefty marketing campaigns coupled with a bull market in the stock market at that time and some other things. I don't want to get too conspiratorial, but it is a fact that there are large financial institutions out there that don't profit from this, and they have large marketing campaigns to try and drive people into mutual funds, 401ks, right? All the standard answers where the whole premise is, Brian, I want you to deliberately give up your control of your capital to somebody else, some financial institution, and just hope and pray that whatever assets they put you in go up in value. And that's it. That's the whole strategy, right?
Yeah. And they go.
Maybe the market, which is not a market, when they say the market, they're talking about the S&P 500, which is an artificially created Wall Street metric. Okay. When you go to your local farmer's market, that's a market. People freely buying and selling goods. That's an actual market. So, I never agreed with that particular strategy of just basically gambling with your money. And even if it is likely that the market is going to go up at a certain rate, and even if that is what has happened historically, I don't think it's worth the risk, especially not with your whole retirement savings, right?
Yeah.
That's not saving for retirement. That's speculating on what the S&P 500 might do, which it's okay to do that. I would just be careful with position sizing because you're not saving, you're speculating.
And we have these, somewhat recent bank closures to be concerned about. If you happen to have your money in one of those banks, you're only as good as the guaranteed amount. Even then, I wonder if you will get that. The insured accounts. I forgot what the amount was, but it's a pretty common one. But so you can only have a certain limit of your money stored in a bank. Anything beyond this limit, you would just lose. Period. And so they say to diversify banks. I'm like, wow. So I'm curious because the insurance industry also is quite a large industry. Are they shunned from disclosing this concept themselves? And what's keeping them from spreading the word? What do you think?
Yeah, great question. So first of all, the insurance companies, I say I'm the worst at sales and marketing next to the insurance companies. Think of the sort of person who runs an insurance company, right? These are the most boring, stodgy, risk-averse people, which is exactly what you want. Like, that's where you want your safe money, right? That's what you want. That's why they can. So as an example, Penn Mutual, one of the carriers I worked with, they've paid a dividend every single year straight for over 170 straight years. Think about that for a second. 170 straight, because these people don't take on risk, okay? So partly it's because they're not very good at marketing. Certainly they are a large industry, but they do what they do best, which is to be an insurance company. They are not so good at marketing. That's not what they do. Now, certainly the components are all there provided by the insurance companies, okay? But the people who are the best at providing the product are not necessarily the best at strategizing to make the best use of it or marketing it. Think about someone who's a great home builder is not necessarily a great real estate investor, right? They provide the asset that the real estate investor is going to use, but how the real estate investor uses it is totally up to him. Whole life insurance is similar. The life insurance companies provide us with the brick and mortar to build these beautiful assets, but then that's where what I do comes in, where I design the policy specifically for the person and help them to make the best use of it. So, but it's a great question. It's a great question.
Man, oh my gosh. I mean, what a great that's a beautiful way of describing it. That made such total sense. I was like, it's like you've done this before or something, Logan. I'm just thinking.
I like using analogies. I think people respond well to
It
analogies.
it it does a great, yes. It's a powerful way of explaining things, through metaphor, analogies, and things like that. So that's a perfect segue. I'd like to find out more about you and your company specifically. It's Hazeltine, as we see on the screen, Hazeltine
Mhm.
LLC. And what is your ideal client? What are they? How old are they? Where do they hang out? Are they employees of corporations? Are they entrepreneurs? That kind of thing. I mean, it doesn't mean you'll probably not push away anybody, but your
Right,
ideal client,
right.
what would that be? What are you focusing on? What are the kind of people that you love helping the most? And if you have a success story or two, this is only a 20-part question. I hope you remember it all. If you have a
Mhm.
20, if you have a success story you'd like to share, we'd love to hear that as well. Would that be all right?
Absolutely.
All right.
Yeah. So my ideal client is someone who wants to take control of their finances, right? So they don't want to outsource it to somebody else. And they are financially disciplined, right? So they're saving money. They're not in toxic debt. They're not spending more than they earn. They're stable. Um, and they're willing to do the work, right? So if I ask you to read, as an example, if you want to write this down, Becoming Your Own Banker by Nelson Nash. Becoming Your Own Banker by Nelson Nash is a less than 100-page book that I would recommend everybody read. Becoming Your Own Banker by Nelson Nash. It's not a requirement, but you're certainly going to help yourself the more you learn about this concept. So I'm like a good fitness coach. I'm not here to do the work for you. I cannot do the work for you. I will help in many ways. I will help optimize your cash flow situation any way that I can. I do a really good job, I think, of putting people in the best possible financial situation even before we get to infinite banking. But you have to do the work. I can give you your private bank, but you have to be your own banker now. I'm not doing it for you. And if that doesn't excite you, if you're like, I'd rather let somebody else handle it, then maybe you should go talk to your standard financial advisor, give him some money, and he will manage it for you. That is not what I do. In terms of success stories, I've had multiple. I have a client who he got started under the age of 30. My clients do tend to trend younger, but that's just because I think they're more open to an idea they haven't heard before. I have clients who are older too. It's really more about, are you receptive to an idea and are you willing to learn, right? And he actually used his whole life policy to finance a number of investments that he was cash flow positive on, and he did very well with that. So what he's doing is he's making money not only in the investment, but he's also making money as the bank that financed the purchase of that investment. So think of it this way. If you're a real estate investor and you buy a property, buy it with your own private bank. So you own the property and you own the mortgage, right? So you're making money off of the property itself, and you're making money off of the financing of that property. And he's been doing that for multiple years now, and he's done quite well with it using alternative investments. So when you use your private bank, you're going to use it to finance whatever you were going to do anyway, right? Investing, spending, savings, whatever, right?
Interesting. Yeah, gosh, I don't even know where else to go. I have so many questions up in the air, but you did mention pretty much in the beginning that, the description of how this works, you were going to give a high level overview, and there is some research that needs to be done to fully comprehend the whole thing. And to that end, excuse me, I'm a big fan of modeling success and just reaching out to the person who knows the most about it, to guide you down the right path, to tell you where to go get your information. And if that's okay with you, Logan, I would just tell them, if they're at all intrigued about this concept as I am, to just simply reach out to you and start that
Yes,
conversation.
Please do. My YouTube channel, which I think we can share all my links. You can schedule time with me through my Calendly link. But if you go to my YouTube channel, I have a playlist on the infinite banking concept, and there are some really good tutorial videos there. They start at like less than 2 minutes. You can kind of just go through and get a conceptual idea, and then they go into as much detail as you want, right? You can stay very high level and just get the basic gist. Or if you're someone who wants to go real deep into it and look at numbers and things like that, there's some of that as well. Yep. So that's really where I've tried to put my best content. Then I also mentioned Becoming Your Own Banker by Nelson Nash. That's sort of the classic work on the subject. Nelson Nash is sort of the originator of the term. There's another book too called What Would the Rockefellers Do by Garrett Gunderson. What Would the Rockefellers Do by Garrett Gunderson. After you've read the book by Nelson Nash, if you're intrigued and you want to learn more, which the more you learn, the more you read, the better you're going to be, the more likely you are to be successful. I would read that book as well. You can read how the ultra rich have been using this strategy for many years. So I would also, to answer further your earlier question, Brian, I would say the smart money is doing this, and they have been doing this for many decades, right? The ultra rich, the banks themselves, and the corporations. Okay, there's something called BOLI and COLI, bank-owned life insurance and corporate-owned life insurance. Right, the banks and large corporations are doing exactly this. They take the money that they have and they flow it through whole life insurance policies for all the reasons that we mentioned. So that's another interesting read as well.
How did life insurance become the vehicle for this? Because it just doesn't make sense that it became this, two-part thing where it's you either get your policy upon death or you can use your cash during your life. Usually what I learned was you can't have both. I mean, the purpose of it really is for when you die to have something for those who are left after you, to be able to have something to keep going with their life, take care of your burial, all that good stuff. But do you know the history, like how they got involved and became part of this vehicle?
Yeah, it is a very unique vehicle, and there is a very unique history behind it. The policy loan feature actually originated in the late 19th century. Wow. So keep in mind, this vehicle goes way back. So you want to talk about a safe, stable vehicle that has survived every economic crisis and paid dividends, like I said before. Since 1848, Penn Mutual's paid a dividend every year. Never missed a year. That's incredible when you think about that, okay? So we're talking about the safest, most stable companies and products out there. So there was a panic in the late 19th century, and people wanted to surrender their life insurance policies. And the insurance companies, who were well capitalized and not panicking at all, said, well, why don't we just we don't want you to surrender your policies. We want to keep you as a customer. So here, what if we let you borrow against your policy? You need some money? We've got money. The banks may be failing, but we, the life insurance companies, are doing just fine. Here, put up your policy as collateral and we'll give you a loan. That way you get the best of both worlds, right? And we won't require any repayment terms because we already owe you that death benefit. So we're not giving you anything we don't already owe you, right? We're just giving it to you in advance, right? And that started this whole beautiful system where you can borrow from your future dead self, as some people have said, with no repayment terms, right?
Wow.
And I would say the whole life insurance contract works the way people think a bank works, right? It really does, meaning that the capital is actually there. Your cash value is actually there with your name on it. The insurance companies have the reserves to back it. And if I could do one more analogy, this is one that I think helps a lot of people because most of us are not familiar with banking. It's too abstract. We don't understand it. It's so counter to what we've been taught. Okay. But most people have the experience of owning a home and paying a mortgage. Okay. So think of it this way. Term life insurance is like renting life insurance. Whole life insurance is like owning life insurance. So let's say you take out a whole life insurance policy with $1 million death benefit. Okay. You just bought $1 million house. You have $1 million asset. It's yours. You own it. You control it. Okay. Your equity in that house, though, is not going to be $1 million. You just made your very first mortgage payment. Maybe your equity is $10,000. Okay. That equity in the policy we call cash value. Okay. Similar to your house, both the total value of the policy, that $1 million death benefit, and your equity in the policy, your cash value, go up over time. As you make premium payments into it, those payments get more efficient over time, similar to your mortgage payment. It gets more efficient over time. So your equity in the policy and the total value of the policy are going up, and you collect rental income. Like if you're a real estate investor, that's the dividend. Okay. In the dividend, we reinvest, quote unquote, into the policy based on the way we design it. So we get this nice compounding growth inside the policy. It's all tax-free, no market risk. Like the real estate investor, when the real estate investor's built up a bunch of equity in one of his properties and he wants to use the equity, he's not going to sell the property. That would be dumb. Then he would lose all that future rental income. He'd lose all that future capital appreciation, and he might have a taxable gain. So instead, he's just going to borrow against his property. Now he can use the equity in that property. Meanwhile, he keeps collecting the rental income. The property keeps going up in value, right? Same thing here, except instead of using real estate, we're using a whole life insurance policy where that death benefit is the asset. And when we borrow against our policy, there are no repayment terms whatsoever. We're not taking on any debt because the collateral we're borrowing against is guaranteed. It's mathematically impossible to default on that loan. Right?
Wow. It's getting clearer now.
It's another rabbit hole, but I think that analogy, helps people. I think that analogy helps people because I've kind of moved, as my business has evolved. I started by talking about banking, and that is what we're doing. But you have to meet people where they are, right?
Yeah.
And it's too abstract, right? And it doesn't jive with their experience because people don't understand how banking works. And I don't blame them. Nobody teaches us this. They don't teach you about banking in public schools. I mean, come on. But most people have had the experience of owning a home, the benefits of home ownership, and how a mortgage works. So when you use that analogy, then it starts to make sense to them. Because to your point, cash value and death benefit are not two different things, believe it or not. Right? It's not like somehow randomly you've got death benefit and then cash value just floating out there, right? The reason why I'm sorry, you got me going on something I'm passionate about, so you stop going too deep.
No.
But, so the reason why a whole life insurance policy has cash value where a term life insurance policy does not is basic financial principle. A future payment has a present value. Okay. On your term life insurance policy, more than 98% of the time, that death benefit will not be paid, right? And you hope it isn't paid, right? The only way it gets paid if something bad happens, you die prematurely, which you don't want, okay? But a whole life insurance policy has no expiration date. So that death benefit will be paid, right? It's guaranteed. None of us are immortal. It's guaranteed. So that future payment has a present value. That is the cash value. Cash value is the net present value of that future death benefit. And therefore it grows based on an actuarial mathematical calculation. We're not praying and hoping that the S&P 500 goes up, right? The only question is how much is it going to go up? And that depends partly on how we design it. The interest rate is guaranteed, but then dividends are not, right? So the only question is how much is it going to go up every year, right?
Interesting. So when you borrow, are you borrowing against the policy value or the cash value? Great
question again. So technically, you're borrowing against the death benefit, just like when you borrow against your house. Technically, you're borrowing against your house.
Makes sense.
But how much you can borrow is limited by the amount of cash value you have available. Just like when you borrow against your house, you're limited by how much equity you have in your house, right? So, technically you are borrowing against the death benefit, but when you take out $1 million policy, you can't immediately borrow out $1 million. That's not the way it works, right? You've got to build the equity in the policy first.
Yeah, that makes sense.
Yeah.
Very cool, man. That's got my wheels a turning, and goodness sakes, I just looked at the clock. See, that's a good sign. You've got me completely immersed in this, and you and I had a chat about this some time ago. I was dense. I just was not getting the whole thing, but I see why. Because it
took me years. It took me years. So
Well,
I'm slow. I'm much slower than you.
I knew enough about whole life to confuse the holy bejeebers out of me. That's like you said, it's best if you don't know anything about it, and just listen to what you're saying and follow what's been going on since 1848, right? That I don't know if has this concept been around since 1848 or just that
So
dividends are being paid out?
no, actually. So Nelson Nash wrote the book in the 1980s.
Oh,
I
wow.
would say it was always possible in theory, but in practice, I would say more and more entered the popular imagination in the 1980s. There were probably some people maybe doing this, but not at scale. Not at
Wow.
scale. Also, we've gotten more advanced techniques for designing whole life policies. So your standard whole life policy, okay, if you look at it, in the first 2 years, you'll probably have zero cash value. Zero. Not the way I design a policy, right? We have more ways of designing policies to accelerate that cash value growth, and to optimize it for your specific banking needs. And that's one of the beauties of whole life. It's so flexible in how you design it. There is no one size fits all solution, and I can always customize policies for my customers, which is what's so great about it. Again, I love the real estate analogy. It's like buying a custom built house. We will design it for your specific needs, your specific requirements. So there's no one right way to design a policy.
Gotcha. Wow. I honestly didn't know there was that much flexibility in designing any policy. I thought it was pretty regimented, and it's going to be pick door number 1, number 2, or number 3, and that was it.
Yeah. We are. Some people would like you to think that. We are limited by the rules of actuarial math. That's really the only limitation. So yeah, I can't give you $1 million tomorrow. I wish I could. I can't. And
yeah, and if you were able to, many people would wonder, how is that possible? All right, look, got a freezing video. There you go. He's back. So you mentioned a couple books. So one was Becoming Your Own Banker by Nelson Nash. The other one was What Would the Rockefellers Do? What was the author name on that again?
Garrett Gunderson.
Garrett Gunderson.
Garrett Gunderson. Yep.
And so this is something I like to bring up to the audience is when you hear of phenomenal resources like this, I mean, the minute we get off of this live that we're doing now, and the minute you stop watching or listening this show, what I recommend you do is go out and get those books immediately. This is what I love doing, and this is one of the greatest perks of being the host of this show, Logan, is almost every single time I get 1 or 2 book references. And if I haven't read it yet, I'm on Audible or wherever trying to go grab it. I like Audible. That's my first go-to, is to listen to it while I'm driving, because then what else am I going to do? I mean, let's get, they call it, what do they call it? College on Wheels. But
I haven't heard that one.
Yeah, it's like University on Wheels is another good one. But yeah, it's like my recommendation to everybody is write those down. So again, it's Becoming Your Own Banker by Nelson Nash and What Would the Rockefellers Do? Garrett Gunderson. And then go get these books as soon as this show is over. I mean, you can get them really inexpensively on Kindle, Audible, Amazon, and there may be others that you're aware of, Logan, that are even more. I mean, books don't cost that much. Come on. And for the return you're going to get on the investment of that book, according to Logan, I'm convinced he's very confident. He's 100% certain in what he does. And he's probably one of the greatest salespeople on earth that never knew he was. And that's what I love about this. And truly, I'm telling you, man, you have that one component that so many people don't have, because they don't have enough seat time in what they are representing yet to have that level of confidence in what they are offering, or what they're offering flat out doesn't work for everybody, and they just don't have as much success. So there could be a lot of reasons, but having that confidence in that, this is what people want, Logan. They want certainty. That is the magical term. When it comes to buying, everyone buys on emotion. Certainty is an emotion of confidence of, yes, I know with all certainty, or pretty darn good certainty, that I'm going to get the results I want if I go to Logan Hertz. And that's going to be your golden ticket. And it's going to continue to do that.
I want to also mention too, one of the things that I do for my customers is what I call my cash flow optimization exercise. So when you come in the door, I promise I can find you another $300 a month in cash flow without changing what you're doing, just by optimizing what you're already doing. So if you want another $300 a month in cash flow, I bet I can find a way. It won't hurt you to try. I'm usually able to do that for my clients. Sometimes I'm able to find substantially more in cash flow just by unique creative strategies I know of for optimizing what you're already doing. And at least at present, I don't charge for that service. I benefit from the credibility it gives me, right? So one of the ways I always like to tell people is, look, I'm going to give you real, concrete, immediate results. It's not give me your money and then hypothetically 5 years down the road, let's see if maybe it worked out depending on what the market did. No, it's let me see your situation. Boom. By optimizing a few things, I just got you another $500 a month in cash flow. And that impacts your lifestyle today. Right?
And so, you know, what the astute individual would do is make that first introduction with you, get that done, and then take that additional money and reinvest it in a whole life policy that you design custom for them.
Yeah. And that's usually what happens, because at that point I've built credibility with that person.
Exactly.
Right? And they know where that money should go. But of course, it's up to you if you want to just take the money and run. I'm not stopping you, you know.
But see, here's the thing. I'm a fan of giving back. And if this is something you traditionally don't charge for, I would say, now, Logan, thank you for that. I have money I never had before because of your genius. Now, how can I help you in return? But as I'm helping you, you're still helping me. I mean, it's like a never-ending win-win cycle. So it's like, it's a no-brainer for everyone out there. I wanted to frame it for everybody out there to say, I wouldn't just go in to say, hey, go get $300 to $500. He said, yeah, you can do that. And he means it. But why would you? When there is a better long-term play than just a quick kill of a few $100s a month or more.
And one way that everyone can help me is sharing my content. So if you got value from this, it's a huge help to me to just share my content with people, and don't feel like you have to endorse me. Negative publicity is better than no publicity. You can just send it out, say, hey, I saw this guy talking. What do you think? Right? So that's always a huge help to me, for sure.
I doubt there will be any negative publicity. I cannot see that coming. So, and for everyone out there, don't be that person. Just, you know, if you have talked to him and you know personal firsthand that something didn't go right, then you can say something and be honest about it. But if you don't know him yet, if you haven't had a conversation with him, please don't go spreading weird stuff. Just be good, be above board, help each other out. He's helping a lot of people with this previously to me unbeknownst strategy that I think is genius and can help a lot of people. I'm just, I love bringing on people like you, Logan, that are here to help others. It's not just all about you. And you just proven that by saying you have this one service you don't even charge for yet, which I'm in my head, entrepreneur head going, bro, you're going to be charging for that. But it also
I probably will at some point.
But it also is probably becoming a very effective lead magnet, meaning they come in, they get that free service, and then you have that follow-on discussion, and it can become an ultimate transactional sale with you in the way of a whole life policy. I'm imagining that's where it ends, or it goes into.
Let me throw one thing out there too. So one thing I recommend to everyone, and I've actually changed my process recently to incorporate this, is take out a convertible term policy. So you need to protect your insurability. So don't think you can get a whole life policy anytime you want. You cannot. There's this thing called underwriting. They're going to look at your health. They're going to look at your finances, and you have to qualify. Okay. And they're going to give you a rating, and they're going to limit how much you can get based on your assets, your net worth, your income, that kind of a thing. So you need to secure your right, your privilege to take out a whole life policy by first taking out a convertible term policy with the company that has a competitive whole life product, which narrows it down to a few, you know, with an agent like me who knows what he's doing. And what that does is it reserves your spot in line. So let's say you're 30 years old and you make $100,000 a year. Your insurability or human life value is $3 million, meaning they will not give you any more than $3 million of death benefit. That's it. That's your limit. So take out a convertible term policy for $3 million and do it yesterday. So now you've locked yourself in its term, so it's not expensive, right? It's fairly inexpensive, okay? But now you have the guaranteed right to convert that $3 million in whole or in part to whole life policies in the future, right? So you secure your future net worth, right? Because the insurance company is telling you if you manage your affairs right, you should be worth $3 million when you retire 30 years from now. So why don't you secure that $3 million today on a guaranteed basis with convertible term, and then over time, hopefully you'll convert it to whole life so that over time it all becomes permanent. And then eventually it all becomes liquid in terms of cash value. And you didn't take on any market risk and you didn't pay any taxes and you were protected that whole time. So I'm a huge believer in convertible term. Even if you don't believe in the infinite banking concept, it locks in your insurability, right? So if at some point in time, while you have that convertible term in force, something happens to your health, you can still convert it. You can still convert it. Okay. Do not take your insurability for granted. Do not. Please don't do.